Hello, everyone, and welcome to a special edition of RSM's Tax Policy Now. I'm RSM Public Affairs Leader Dan Ginsberg, and today we're talking state tax policy and how states around the nation are going to manage through the massive financial shortfalls they're facing brought on through the pandemic. Today with me is RSM state and local tax expert David Brunari. David works in RSM's Washington National Tax Office and will hopefully be able to help us sort out just how bad things are in state capitals and the actions middle market companies should be considering to address them. Hello, David.
Hi, Dan. It's great to be here.
Awesome. Good to see you, David. So let's just get right into it. We all know that the COVID-19 pandemic has wreaked havoc on state and local finances. Can you just give us a sense of how bad things really are?
Well, Dan, pretty bad. Estimated tax losses over the next 2 years, this varies by state, of course, are as high as $450 billion. Local governments are facing similar losses, albeit a little bit smaller, obviously. And everyone knows why, right? The economy has been pretty much shut down for a good part of the past year. The health crisis continues, and as can be seen from the unemployment numbers and the rising bankruptcies and the fluctuations in the stock market, things are unlikely to improve for a while. As a result, governments simply aren't raising as much revenue. And revenue from virtually every type of state and local tax has declined. Retail stores have been shuttered, so sales tax revenue is down. Restaurants, hotels are closed. Hospitality taxes are way down. Income tax collections have declined, both personal and business. Less wages, less profits to tax.
Yeah, so truly unprecedented concerns really across the nation. So with all of this, though, how should we expect that states are going to react as they have to try to address these massive losses?
Well, Dan, the first thing to keep in mind is that every state has a balanced budget requirement for their operating budget. They cannot run deficits. They will need to either raise revenue through taxes, cut spending, or some combination of both. And everyone who studies this issue, and we study it a lot, believes that tax revenue will have to be increased to some extent. There's just no other way for states to balance their budgets.
Yeah, so let's try to get a little bit more specific. What taxes do you see being raised?
Well, that's going to depend on the state and its particular political environment. It is likely that many states that impose personal income taxes will look to raising rates, particularly on high income earners. We've already seen proposals to do just that in about a dozen states for the upcoming legislative sessions. In the 45 states that impose sales taxes, there will almost certainly be attempts to expand the base to include more services and digital goods. I also think that many states will look to increase tax burdens on business entities, both traditional C corporations and pass-through entities. And we have seen proposals on the business entity front. We know that some states will propose new gross receipts taxes, and we know some states are looking at pass-through entity taxes similar to the Illinois replacement tax and others. There will also be proposals, although I think less likely to be enacted, that will be aimed more at income inequality than balancing budgets. There's talk in some states, particularly California, about adopting wealth taxes. There is also talk in some states of increasing or reinstituting state taxes. These proposals are impractical from a policy perspective, in my opinion, as they inevitably lead to out-migration.
Yeah. So, David, this is all pretty depressing. Is there any good news?
Well, yes. States States are aware that some taxes, to the extent it's good news, states are aware that some taxes are better than others when it comes to raising revenue and not curbing the recovery. Believe it or not, many legislators get the old shibboleth that when you tax something, you get less of it. And getting the economy going is as important as balancing the budgets. The other good news is that some taxes, like local property taxes and excise taxes, have held up pretty well.
Wait a minute, did you just use the word shibboleth?
I did, Dan.
Oh, okay. Well, you know what? That alone gives me hope that better days are coming. So, is there anything else we can expect on the state tax front?
Yeah, well, yes, probably a lot of things, but something in particular to keep in mind is that it's likely many companies will use permanent remote employees in the future. That is, people will work from home all the time. And states are aware of that, and they are studying and thinking about it. They're looking for ways to entice businesses to locate remote workers in their jurisdiction. They are likely to use a variety of state tax incentives to accomplish this. These might include business tax credits, sales tax exemptions for equipment purchases, and we think it's going to be a very big deal.
So what are we telling folks in the business community? What do we think that people should be doing?
Well, two big things besides hoping the pandemic ends soon. First, business leaders need to pay attention to what is going on in their state capitals. While revenue raising is almost certain in most states, the particulars are difficult to predict. It is critical to follow the legislative process, and during that process, it will become clearer what is likely to be enacted. Second, and related to the first, is when those changes are enacted, they may, and I don't want to be too alarmist here, but they may affect business operations in significant ways. For example, it is possible that one or more states will adopt a gross receipts tax. Such a tax has dramatic consequences on costs, supply chains, the need for vertical integration, compliance. And businesses are going to need to be able to evaluate such changes and be prepared to take the appropriate action. Remember, all taxes affect markets and economic decisions, some more than others, and we can certainly help businesses figure that out.
Yes, so sure. David, our time is up, and thank you very much for joining us today.
It was my pleasure.
And so for all our viewers, be sure to head off to the RSM website to sign up for our tax alerts and to visit RSM's Tax Reform Resource Center for deeper explanation of these and other important tax issues. And thanks again for joining us, and we look forward to seeing you all again soon on our next edition of RSM's Tax Policy Now. Bye for now.